with Top Growth Financial. If you're new to this channel, what we like to do is we like to break down different stocks, put price targets on different stocks, and just analyze the overall market as a whole. So if that sounds interesting to you at all, just press the subscribe button. It'll help us out a lot. And so let's get started with today's video. What I wanted to go over is Palantir Technologies, which is a big data analytics company. So what they do as a company is they basically perform a deep search of any medical, financial, communication, or criminal records on target. In fact, the company's technology actually helped locate Osama bin Laden back in 2011, and today it's helping track COVID-19 infections, predict future hot zones, and it also helps track medical supply chains. So what they're trying to do for the future is they're trying to get themselves in the door with more healthcare and energy companies, because what they're doing is mostly for the government. They're trying to help counter terrorist attacks, and they're also helping back the military. And another thing that they're doing to try to speed up corporate adoption of the artificial intelligence technology that they use is they partnered with IBM earlier in the year. And under this deal, Palantir made its software available for IBM's cloud computing customers. Now I just wanted to go over their chart real quick. And right now they're sitting at 2864, which is still more than 40% off its January 27th peak, but it's still more than 200% from the September 30th debut, when it launched its direct listing priced at $7.25 a share. Another thing about Palantir is their stock has an 89 relative strength rating, which means it's in the top 11% of all stocks, according to the IBD stock checkup. And they also give Palantir a 72 composite rating. So while both of those are great, they only have a 65 earnings per share rating, which is a little behind the market average and what you would like to see for Palantir, but their earnings haven't exactly been what you would want them to be. They're expecting earnings per share to be 21 cents and for them to be profitable as a company. So since that hasn't been the case in the past, that is still a big jump for Palantir, just them being able to be profitable as a company. With that being said though, their revenue stream was still larger than most people expected. In fact, their government revenue rose 66%, along with their commercial revenue, which rose 28%. Also, their management wants to increase their revenues 30% over the next 4 years, which I think could definitely happen if they continue to increase their small customer base. When you're looking at certain stocks and deciding whether or not you want to invest in them right now or not, you have to look at what they're going to be doing in the future, how they're going to nurture their long-term growth opportunities, which I think that Palantir is doing a very good job of. Even though they have all these big contracts from the government, they're also working on a lot of different smaller contracts, and they're also acquiring different companies, different SPACs specifically, to try to help build their portfolio up a little bit and get different revenue streams coming in. So as of the quarter ending June 30th, 2021, Palantir disclosed $250 million in investments spread across 10 different companies. But in return, they got total revenue commitments of $428 million. So now Palantir has the incentive to work with these companies, help them grow to be even bigger, and help bring in future revenue. So I bet you've noticed throughout our videos, the mission I like to do is we like to get another opinion when it comes to a stock. We like to go into tip ranks and we like to see what other analysts are saying about it, what they put their price target at, and how it compares to ours. So let's go do that right now. So right now, looking at their tip ranks analysis, you can see that they put it at a moderate sell with 1 buy rating, 2 hold ratings, and 3 sell ratings, with a 16.41% downside and a 12-month price target of $24 on average. The main reason is they still really haven't found a way to become profitable. So thinking that it might change now that they're publicly traded shares, I don't know if that's necessarily a good bet, but they are getting into a lot of different sectors, including the healthcare and energy sector, as I mentioned earlier, which could help boost their revenues, but still they have a very high overhead cost. When you look at their stock analysis and ratings on tip ranks, you can see their smart score is a 2, which is to underperform the market. It's a moderate sell on the consensus analyst rating, and the tip ranks investors' sentiment is very negative. The only thing that seems bullish with this stock is the blogger opinion and news sentiment. So to wrap this whole thing up, I do think that Palantir Technologies is not going to do very well in the near future. I think if you buy it for the long term, that it could generate a good return for you if they're able to get into other sectors and lower their overhead costs. But as of right now, I would not invest in the company. I think it's highly overpriced. And I do think that the stock price is going to drop, so it would present a better buying opportunity if you wanted to buy and hold on to it for the long term. So I guess only time will tell whether or not that they're going to be able to get those overhead costs down, which would definitely put the revenue streams higher, which would drive their stock price up. But again, the reason I did this video is it's a very speculative stock. I hear a lot of people talking about it. Oh, should I invest in it? I say no. I do not think that you should. But I'm going to be coming out with a video here shortly on a stock that I think you should be buying in heavily to. I think it's at a great price point. And that is going to be my next video, so stay tuned for that. Thank you all for watching, and see you next time on Top Growth Financial.